My name is Donna Paoletti. I have my contact information at the end of the presentation. If you need to get in touch with me, we can, certainly touch base afterwards. A few housekeeping items before we actually get into the presentation itself. This webinar will be recorded, and we're actually going to be posting it on our CR Group webpage. You can use the question panel to submit any questions that you have, and we'll be leaving some time at the end of the session to actually address those questions. And we're actually presenting this webinar in a two-part series. So this is part one, and then there will be another part two posted on the same CR Group webinars page later on. So we encourage you, if you like the information that you've seen today, we can certainly get you an invitation to the part two of this webinar. Okay. Let's go ahead and talk about today's agenda. For those of you who don't know about Corporate Renaissance Group, I'll just take 1 minute or less to give you a brief synopsis of our organization, and then we'll actually talk about the current situation that controllers are facing within their organizations, and in particular the finance department today. And then we'll move to the topic of this webinar, which is talking about the best practices that controllers can use to help bring their finance department, up to speed. And finally, we'll be talking about adaptive insights. We'll do a high-level overview in PowerPoint and then move to an actual demonstration and view of the product itself. Given that we only do have half an hour for the webinar, it's a very high-level overview. So again, if you do like what you see, we can certainly schedule a more detailed webinar at a later point. So a little bit about Corporate Renaissance Group. Well, Corporate Renaissance Group was founded in 1989, so we're actually approaching our 30-year anniversary in a couple of years. And our success has really come from our ownership. Our CEO has a vision for the company, and he's promoted that vision for the last 25, 30 years. We are privately owned with no venture capital, no debt, which means that we don't have any other stakeholders other than ourselves to account to and report to, and it does give us the autonomy to make decisions that we think are in the best interests of our companies. We do have offices in Canada, the US, India, South Africa, and Hong Kong, but we also do have a very big partner network of active partners who are out there promoting our products and services. So our reach extends even beyond the physical location of these offices. As an example, we have a partner in the United Kingdom that is reselling some of our products for us. So we've got some reach in Europe as well. And what that has all resulted in over the last 25 or 30 years is, 4,000 plus customers in a wide range of industries with a wide range of, sizes of companies in revenues and employees. So, we tailor our services and products to meet our clients' needs, whether they're big or small and, sort of independent of the industries that they're in. And, the strength and the longevity of our business really is because of the team of people that we have put together. Many of our employees here at the head office in Canada are 20 plus, 15 plus, years with the company. And the memberships, the team members, are a combination of business and technology people. So we, number one, understand the challenges that businesses are facing because we are business people and we are accountants, and we also understand, the technology that is available out there and perhaps the best technology that would suit to meet a certain need. So, it's a great combination, and we've been very successful with this combination over the last 30 years. So let's go ahead and talk about the current situation that financial controllers are facing within their organizations today. And really, increasingly, controllers are being asked to take on not just the job of a transactional accountant, but more of a financial operating officer. So they're almost taking on a CFO type role with their organization, where these folks are the go-to source of information from finance, and they want to ensure that the finance team is running smoothly and that there are no surprises in the numbers, in particular at quarter ends, at month ends, for reporting you know, reporting periods, etc. But the challenge that is coming about is because of this is that the day-to-day jobs and the transactions and the actual underlying work doesn't go away. These are additional responsibilities, and they come at additional costs, and they come at additional time. So there's a pressure on time and there's a pressure on cost. But you know, as this go-to source for information, finance really needs to find a way to improve productivity and reduce these costs and streamline these processes. And this includes, you know, all sorts of things from quote to cash and purchases to payables and month-end closings and consolidations and management and financial reporting, the whole shebang. So if you can, in any one of those process areas, if you can look at improving productivity and reducing costs and streamlining processes and standardizing, it's going to be helpful. It's going to help you move away beyond just number crunching and you know, manual process transactions to a more strategic role within the organization. And we'll see, you know, that is where the best practice is heading. So how do controllers get there? Well, really, they really want to have or rely on some financial analysis software to help them along the way. So, you know, in the past, Excel was great, but now we're looking at, you know, outdated financial systems, and we're looking at information in all sorts of different areas, and you know, there's no one version of the truth, and there's no one central place of data, and it's very difficult for financial leaders to find real-time information that they need, you know, to answer these inquiries and provide the information in a strategic way to their organizations, and not only to provide that information, which, you know, you can have, you know, at a point in time, but you also have to have the ability to quickly adapt and react to any market changes in your environment and restate these results and reports, and all of this must tell a story, and all of this takes time. So if there's any way, you know, to reduce this and reduce errors and reduce reconciliations, this is the best practice that we're going to be talking about in a moment. So let's move right to that topic and talk about the best practices today that the best-in-class controllers are actually following. So the first one that we've seen, and I should say that this information is in, you know, has been collected from surveys and stuff, and where we've got detailed survey analysis, you'll see a footnote at the bottom of the pages, so I encourage you to go out and read these reports. And I don't think any of this information is really earth-shattering or new to us. We know that it's happening, but the first thing that, you know, we want to do, or the best practice controllers do, is that they really cut their reliance on spreadsheets. And we're using the month-end close process, or your financial reporting period close process, as an example in these best practice engagements that we're talking about here. So number one, you need to cut spreadsheets. Why? You know, it's simply the wrong choice for managing consolidations and related processes and closing. What it does as well is this helps to minimize errors due to manual entry that you have in Excel. It helps to minimize errors in formulas. And what you're doing is, if you actually move away from spreadsheets into a more standard and repeatable process, you're going to help to reduce risk. So number one, you want to manage and cut your risk. You can do this by cutting your spreadsheets. And if you can build in workflows and automation and reconciliations and automatic allocations and consolidations and all of those sorts of things, and combine it with data that your ERP systems, you know, that's coming from your ERP systems, not only are you going to, you know, reduce errors, but you're going to be creating repeatable processes. You're going to be reducing risks, and you're going to standardize within your organization. So the overall goal by saying, let's get rid of the spreadsheets in the close process, is that you're going to reduce your time spent on error checking, and you're going to leave more time for strategic analysis, so that you can actually start to not only report on numbers, but also report on or provide meaningful analysis of those numbers and turn that data into information. So the second best practice that we would like to put on the table is using automation to close faster. So, you know, what do I mean by that? Well, if you can have a process in place where you can create standard business rules and standard journal entries, and with a click of a button, these are all automated, it's going to help you close the books faster and more accurately. It's going to help streamline the consolidations and create a consistency on a month or period basis across your entire organization, and including all of the, you know, the companies or sub-companies and subdivisions, etc. And the beauty of it is that with one version of the truth and everybody working in one instance, you're actually going to be able to report real time. You know, everybody has the same set of numbers. Everybody's looking at the same information at all points, which is great. So if you can use technology to help to maximize your efficiency, that's great. The goal here with this best practice is let's spend time or, you know, embrace automation, reduce manual tasks, and increase time for your strategic activities. Again, so you can focus on reporting to your organization and your key stakeholders, not just data, but information that they can use for better decision making. And the final best practice that we're going to be talking about today is leading with data and analysis. So, you know, companies don't simply rely on, you know, financial data. Oftentimes financial data is combined with operational data. And the problem is that, you know, increasingly we're being asked to provide this data, but it's not all in one place. So we spend an awful lot of time compiling this data to create a package of reports. And, you know, we don't want to spend the time compiling it. We actually want to spend the time interpreting the data so that we can contribute to decision making within our organization. So, you know, the goal here is to, if we can provide people with self-service tools, we can have all of the data in one place and we can see the results so that we can on demand take a look at, you know, reports and analytics and scorecards and identify patterns over periods, and we can create standardized reporting across the organization on key performance indicators so that, you know, everybody has the same definition, is looking at the same thing. We're going to create consistency, and we're actually going to create a sense of trust in the numbers as well, because there's one version of the truth. Everybody's consistent, everybody understands the definition, etc. So not only, you know, do you want to spend less time on gathering data, but you want to spend more time on strategic analysis, and you want people to have the faith in the numbers. So if there's one central place and everybody has visibility and everybody's accountable for that data, that's a wonderful thing. And it, you know, the self-service environment will really allow, you know, the users or consumers of this data to be able to go in and interact on their own time. And, you know, when we talk about standardizing across the organization, that's not to say that certain individuals or departments don't have their own reporting needs. And the nice thing and the flexibility of the software is that you'll see there is the ability to not only create, you know, standard report packs, but you can also create individual reports as well to suit specific user needs and the audience that's looking at those. So let's go ahead and have a high-level overview of adaptive in the presentation first before we jump right over to the software demonstration itself. So just talking about adaptive and who they are. The company has been around for quite a while, and you can clearly see that they are a market leader in their organization. I mean, their key sweet spot is mid to size market to enterprise organizations like Coca-Cola, Philips, NBC News. You know, their goal is to empower these management teams and decision makers from a planning and reporting and consolidation and analysis perspective. And, you know, they've been around for a while, and they're helping to drive success of these organizations. And the key success of adaptive is that they've actually provided a unified suite of products built in the cloud for the cloud. So it's not a tool that used to be an on-premise tool and then was adapted to the cloud, because there are always challenges with those sorts of migrations. It was always intended to be a cloud you know, software and tool offering, and they had the vision back in the day at the time to think this is the space that they wanted to be in. And it's really an intuitive solution for all types of business users. So you don't need programming degrees and IT and technical experience and background. It truly is meant for the business users. And adaptive success has not only come from, you know, improving and innovating on their products in the cloud space, but it's also from providing best in practice services and support, and a partner network that supports that as well. And that's where Corporate Renaissance comes in. So we're a Canadian partner of Adaptive Insights, and there are currently over 125 clients in Canada using Adaptive now, which is actually a good number. And again, what you can see from this slide is that it's equally applicable across all different types of organizations, from healthcare leaders and manufacturers and consumer brands. And it's flexible enough and scalable enough that it can meet the needs of your organization. And really, the whole model is around the core value of improving planning and analysis and reporting across the organization. And that really is applicable in any industry for organizations of any size. So it really does make it attractive to the enterprise and mid-market companies that we were talking about earlier. And, the three benefits really that I would like to talk about of Adaptive are that it's fast, it's easy, and it's affordable. So we talked about, freeing up time and reducing, error checking and reducing manual data entries and consolidations. Well, we've seen, and that many surveys have been done, that it has reduced close cycle times and shortened monthly closes and improved accuracy. And the return on investment quoted in the total cost of ownership versus on-premises solutions. I mean, it's hard to argue when you're looking at the underlying numbers there. And these are sort of third-party surveys that have gone out to the various customers of Adaptive. So what does it actually mean when I talk about Adaptive Insights? Well, the core of Adaptive Insights is a planning module, and this planning module actually allows you to it creates a budgeting and forecasting and modeling application where you can have your centralized calculations and do all of your modelings. So this is where you're going to start to create your standardization and reduce your risks of errors and your consolidations, and you'll see when we get into the actual demo itself, you'll see how the organization structure and all of the data is automatically rolled up, etc. So it really does increase the effectiveness of the finance team from a planning and budgeting perspective. And then the second piece of Adaptive is called Adaptive Discovery, and this is where you can have your dashboards and visualizations that are going to help to show the current performance of your organization in terms of both the financial and the non-financial aspects in a visual way, but it's also going to show the trends over time, and it's going to show the exceptions. And the nice thing here again is that you can create a standardized dashboard so that you can measure the metrics across the organization that matter and give the business users the ability to actually drill down to understand the underlying causes. So we're not just creating a flat, pie chart and saying, look at the data. We're giving them the ability to investigate and discover. So if you've got a flag that says, oh, we're not doing well, you can start to drill down and understand the reasons for that and make decisions to help steer clear and create a course for corrective action. The fourth module that I want to talk about is the adaptive consolidation, and this is where you can actually accelerate the consolidated close process within your organization by creating a clear and real-time perspective across your various subsidiaries or legal entities, and you can do this for internal reporting and or external reporting. So you create percentages of ownerships, and you can create your intercompany elimination entries, and all of these things can be automated so that as you're pulling in your monthly data, these processes can be run automatically at month end and reported on, which is quite nice. And again, the beauty of it is that everything is standardized and the calculations are consistent across organizations and across time. And then the last piece that I want to talk about on this, second last piece, I suppose, is the adaptive reporting. So what this does is, this is a separate reporting module that comes with the adaptive planning piece. So it's not a visual discovery module. This is more of a data and information, reporting, very similar to Excel pivot tables, etc., where you can start to build and build reports and drag and drop and create report libraries and financial data within the model itself for both reporting and investigative purposes. And we'll see on the next slide that they have an Office Excel add-in as well. But you can use this tool to create formatted board packs. You can create detailed transactional reports if you have that level of detail in your organization, and then you can actually, have these standard libraries and packs that are updated on a monthly basis with the click of a button. And you can also allow users to have an ad hoc reporting so that they can build the reports that they want for investigation purposes or, special one-off reports, etc. So, the nice thing with the automated report packaging and the updates on a month-by-month basis are that with a click of a button, you can, recreate a set of reports very easily with all that manual work required, which is quite nice. And then the final piece is from an integration perspective. We all know that data is not necessarily sitting one place. You have data in your ERP, you have data in Excel workbooks, you have data in HR systems, wherever your data is. You can use the adaptive integration to actually get this data into Adaptive Insights, and you have the one version of the truth, so that we talked about earlier, instead of having these controllers going out and having to search for information, the owners of this data can input it directly into Adaptive Insights, have one version of the truth, and have visibility across the organization. So in terms of the reporting and the built-in reports, we know a lot of people like Excel. They've spent a lot of time building up their own report libraries in Excel, and we're not asking you to scrap that and reproduce and redo. If you've got reports that you like, you can very, very easily keep those reports and transform them into adaptive reports with a live connection to the adaptive database with a few clicks of a button. So you can keep those, all of that formatting that you've done. You can keep those quality presentations that you've created, but you can have them dynamically connected to your adaptive planning and consolidation instance. It's very, very easy and simple to do. And not only that, if you did want to create reports from scratch in Excel, you do have the same ability that's in adaptive to drag and drop and look at the dimensions that you want. So let's go ahead now and actually take a look at the Adaptive Insights itself, and I'm just going to minimize this for one moment. And I'm going to open up my login screen here, and you'll see when you log in. So basically the login is actually simply, it's web-based. So when you log in, you go to the Adaptive Insights login page and you simply enter your login information. All of it is on here. Everything that you see when you log into Adaptive Insights is user specific. So because I have full admin rights in this specific demo, I can actually, see everything in here. But think of somebody, if you have an organization with a lot of different users as an example, and somebody might be responsible for capital planning for the entire organization, but that's it, I could restrict that specific user to capital only as an example, but in this case I'm seeing everything because I'm a full administrative user. One thing that you'll actually notice within the adaptive model is that we have what we call an organizational hierarchy, and you'll be able to see that on all of the sheets that we created. So I'm going to jump onto an expenses sheet, and this is where most of the people spend their time when they go into adaptive. These are like the data entry collection sheets for budget data, but you can also, as you're pulling in actuals data, this data will be reported on in these reports as well, so that you can have a time flow of comparisons to actuals if you so choose. So what you can do is you can see that we've got an organizational structure that is actually set up in adaptive here. And this is where we can start to create and consolidation, items and and automated consolidation for different companies. So you can see in this case here, we've got 3 companies set up. One of them is 100% owned, one of them is 40% owned, and one of them is 80% owned. And then we can actually drill down and we can create the underlying departments and sub-departments, etc. And as I get to the bottom level of my organization structure, that's when I'm going to be able to go in and go ahead and make changes to my organization. And if I want to budget below the line item, or I have details below the line item, I can put in that data and I can save it. And the beauty of it is, after I click save, these changes are automatically rendered throughout the organization. So again, because I'm Sales North and I'm doing my budgeting or looking at my actuals for Sales North, I can go ahead here. But as I move up the organization, it's going to go ahead and it's going to do all sorts of underlying calculations and consolidations, based on my intercompany rules that I've set up, based on my currencies that I've set up, because if one, you'll see at the bottom, I can see what currency in my home currency is in US dollars. If I have a Canadian subsidiary that actually budgets in Canadian dollars, I can budget at that level, and then as I roll up through the organization, it will automatically convert based on those exchange rates. So you can see that as I've rolled up and I've entered data in, it's automatically flowing through. So anytime a change is made and saved, I'm in a real version of the truth here. So rather than send out, this expense spreadsheet to, my 30 underlying departments within a company and 30 underlying departments within another company, and trying to get, all of these consolidated and added together for my company, I can eliminate the need for those spreadsheets. I can create one template. I can deploy it to my organizations. When Sales North logs in and looks at their adaptive instance, they are only going to see Sales North, and they're going to input their data. When Sales South logs in, they're automatically going to see Sales North. If I log in as the manager for United States or the VP of the United States, I will see the consolidation, and I don't have to take those 2 spreadsheets and add them together. It's automatically done. So if I can cut out these spreadsheets, and I'm going to spend less time, anytime you have to consolidate sheets, and if somebody inserts a row or inserts a column, you're bound to make some errors there. So if I can eliminate the spreadsheets and reduce error checking, I'm going to increase my time for the strategic analysis. The other part that we wanted to talk about was, streamlining the consolidation and the close process. Well, I've got a consolidation module here that I can set up, and I can actually define, the ownership rules, and I can define all sorts of different things on my modeling page, and I won't get into it. I can create my journal entries, and I can create my intercompany eliminations, and I can do these on a monthly basis in a standardized way. And it's going to very quickly help me streamline, so I can pull in, my trial balance or my account balances, actuals for the lowest level subsidiaries and companies, and the consolidations can automatically be done. So I can help use this automation through this tool to streamline consolidation process, streamline my close process, close faster. What does that mean? That means I can free up some time on these manual tasks and leave more time for that strategic analysis and best practice that controllers are moving towards, to provide not only data but information, so that the executives and the teams within the organization can start to make decisions based on that. And then the final piece is that we talked about leading with data and analysis and going beyond just financial data. And you can see, there's a discovery module where you can click on, and you can have all sorts of indicators that are not KPIs. And, again, based on your security and the access that you have assigned, based on your logins, you'll be able to see different sorts of information. And you can have dashboard views, and you can go ahead and you can look at those dashboards, and you can create them at a click of a button, and you can customize them. And there are all sorts of neat tools that you can do to go ahead and get these. And not only do you have financial data, but you can hold non-financial data like number of units sold or various sales drivers, etc. So as you create these key performance indicators, and you have a workflow within your organization to see who has submitted what data and at what point of time it's in, you're going to be very quickly have faith in the numbers and look at the status and see who's got the data in, who doesn't have it in. Let me take a look at the reports and the visual analytics that are coming out of that, and let me make sure that, you know, with this one version of the truth, we've got standardized calculations, we've got standardized roll-ups, we've got standardized consolidations. We're reducing the manual processes as much as possible. We're increasing the efficiency of the financial operation and the controller in particular, so that this controller can move to more of a best practice environment and embrace some of the best practices within the industry to try and move towards that, and, you know, basically spend less time on transactional and day-to-day tasks and move more towards a strategic role within the organization. So that is basically, let's go back to our PowerPoint presentation just as a recap of the 5 best practices here that we've got, and I'm going to start that again. Go here. Okay, and I'm going to display that. So we're back to this slide here. So just in the 3 best practices that we wanted to talk about today. Number 1, reducing errors and reducing reliance on spreadsheets. You know, there have been surveys that have been done which say, let's go ahead and you know, reduce that reliance and free up time. Number 2 is increasing automation and decreasing manual input, again, to free up time on more strategic analysis. And number 3 is centralizing data and analysis. So if we can do all of that, what we're going to do is we're going to create one version of the truth. We're going to have accurate data. People in the organization are going to have faith in that data, and they're going to have faith in the reporting that comes out of that data. They're going to have confidence in the numbers. It's going to help to lead to better decision making in a timely manner. It's going to increase the visibility into the business performance, and it's going to increase, you know, the strategic nature of finance within your organization, and it's going to help controllers move towards that best practice. So I'm going to go ahead and leave time for some questions here before we close off. I know we're very close to our ending time here. In the meantime, here's my contact information. My name's Donna Paoletti. I've been with Corporate Renaissance Group for 17 years and have been implementing adaptive insights for about 3 years now. Let's take a look at the questions here. Okay. Yeah, there was a question about whether these reports could be saved in a PDF to a central location. There are some automations and workflows that you can build in depending on the modules that you purchase from Adaptive. So you can create some emails and you can distribute PDFs, or you can specify which version or format that you would like your reports in. You know, so a certain set of users may have reports in one way and a certain set of users may want reports in a different way. And, you know, those users may actually have different reports as well. So yes, that's applicable. Okay, well, I see that we are almost out of time, so I do thank you for your time. And again, if you do have or would like more information, please feel free to reach out to me directly, and I'd be happy to either, you know, have a chat with you, give you a more detailed demo of Adaptive Insights, and I would certainly encourage you to come to part 2 of our webinar to continue this conversation. Thanks, folks.